Ever since I share about Baba in my YouTube channel, a lot of you actually message me and ask me to take a look upon other China stocks. Okay, and the three most popular ones I keep on coming across is these three. Yeah, Xiaomi, Meituan, and JD. Yeah, so the next question is always which is the best stock, right? To take a look at. So, like for example, some of you, okay, lah, in my YouTube channel, you all ask me to do a video, okay, about Meituan and JD, and then some of you go and DM me from Instagram, all right, to take a look at also Xiaomi and Meituan again. Yeah, so I'm also quite interested, okay, because not only these two, there are other few more also. Yeah, I just screenshot these two messages. Yeah, so it really piqued my interest since that a lot of people keep on mentioning around the same stock. So I go and decided to have this video for you guys. Okay, all right. So before I move forward, okay, I would like to introduce myself. My name is Daniel Lim. I'm from Better Investing Academy. I'm also a stock investor like you guys. All right, and I'm a 7-digit portfolio manager, and I have over a decade, okay, of investing experience already. Yeah, so you can see these are my members and investors, okay, in our community. Okay, they are from both Singapore and also Malaysia. Yeah, and as you all know, okay, you all watch from YouTube. I currently have 39,000 subscribers in my YouTube channel, and I also currently now leading, okay, a Telegram group, stock investing group here. Yeah, in Telegram. So if in case you're all searching for guidance, searching for how to be better investors here, okay, you can join my Telegram also. Yeah, so let's get started. So the purposes of this video here is to share my views, okay, on these three companies. Now, like I said, all right, I rarely invest in China stocks. Okay, so this is a preliminary research, okay, on these three companies. So I'll be sharing, with you guys, okay, on how at first, okay, I analyze a company before I decide to go deeper. So maybe some of you who invested already, okay, or considering to invest, okay, in this company, perhaps you will find, okay, confidence, okay, or even more information from my video. Yeah, so let's get started with JD.com first. Okay, JD.com. Let's look at their numbers. JD.com here. Yeah, so this is the financial. So go through with me, okay, and you can learn, okay, see how I analyze the numbers, okay, of a certain stocks. So JD.com at first, okay, I want to take a look at their income statement. Yeah, and you can see the income statement is good that they are growing, all right. But the bad news a bit, okay, is that despite they have been growing a very high numbers here, 50-40%, okay, but throughout the years they have been growing into single digits already, all right. Yeah, but the good news is that they are profitable. Okay, you can see their operating income here, all right, they are profitable. It's just that their growth, okay, are growing, but growing at a very severe declining rate. Yeah, until single digits here. Yeah, so this is the income statement. Now, due to the nature of their business, right? You can't expect high margins from them. Yeah, so their margins here is around 10%. Okay, it's good. It's still increasing. Okay, previously like 7%, now increased up to 10% already. Then they are profitable as of now. Okay, in case if you compare to last time it's quite having losses, right? Yeah, so they are now profitable, but very, very thin margin. Yeah, this business JD.com here. Yeah, then let's go through their balance sheet. Now, in terms of balance sheet, it's quite good. If you see throughout the years, the assets has been growing, okay, every single year. Yeah, and then the cash, of course, okay, cannot cover their total liability so far. Okay, but their cash ratio and the current ratio, I would say borderline. Okay, not the numbers that I want, but that's how they've been doing their business. Yeah, you can see instead of judging this 1 year, right? But they've been doing it. Okay, I'm maintaining at this low around here 0.3, 0.5 here. So I guess this is the nature of their business here. Yeah. So balance sheet, I would say quite healthy also. Okay, for JD.com. Yeah. Now, the most important thing is a company's cash flow. Okay, because if the company never make cash, keep on burning, then they cannot sustain, right? So for JD, it's good to see. All right, for annually okay, you can see in the I feel it's annual, right? They have been producing cash. Yeah, it's just that recently, just recent quarters here. Okay, let me go to the quarterly now. Yeah, the quarterly here dropped a little bit. Yeah, so I do not know. Okay, I have to go and dig on deeper. Yeah, so but overall, I can see, based on their financial side, like on my own standards, okay, I think there are better companies out there because the margins are very, very thin. Growth are also so far, okay, into the single digits. Okay, yeah, this margin I don't really like because it's like you are walking on a very tight rope. Oh yeah, so it's not really my type of company, okay, that I really want to own. Okay, this is my own personal view about JD. So I guess that's why the market doesn't really reward JD quite well. Okay, despite you can see the revenue per share keep on increasing. You see, this company, they don't destroy shareholder value. Okay, because their business is really getting bigger and bigger. It's just that because of the low growth rate, single digits, the margins are also so razor thin, you see. So I guess the market decided to reward them very, very low at only 0.3 times price to sales. It's really very, very cheap. Okay, but sometimes, like you say, okay, don't just focus investing on cheap stocks. Okay, because sometimes cheap stocks can remain cheaper, or even cheap stocks can stay stagnant for a very long time. So they are cheap for a reason. Okay, so this is just a preliminary study based on JD.com. So you want a stock to continue to go up, you must continue to search for any future growth stories. Okay, that can they continue to grow? Can they get bigger? Or can they further improve their margins? Yeah, if this one, all of these metrics all improve, then yes, okay, the market may decide to reward or re-rate them with a higher price to sales, and then the share price will continue to go up. Okay, so for this company, okay, I do not know about you guys. For me personally, it's not really my type of company that I want to own. Okay, yeah, this is just my preliminary conclusion. Okay, now so this is about JD.com for you guys. The next one, okay, is Meituan. Meituan, I think, is more popular recently. I don't know why. Okay, quite popular, and I think after my research, I know why. Okay, now Meituan, okay, you can see if the early years, if you ask me to take a look at this company, right, I perhaps would not have taken a look, because they have having losses, and very unstable operating income and net income, right? But they are growing very fast. They are growing very fast. Okay, and only recently, okay, these 2 years, 2 to 3 years, right, you can see, now they are stable, continue growing at 20%, and it's very, very good. Okay, for a company, okay, because growing at this size, right? Hey, can still grow at 20%, still very good. And the most important thing is, hey, they are profitable already. Operating income and the net income, they are on the profitable side already. Yeah. So for this income statement here, quite good. Yeah, for Meituan. Okay. Then the next one I want to take a look is the margins. At least this one better than JD. At least their margins here, you can see for recent years, okay, has slowly improving, close to 40% gross profit margin. Perhaps I remove this one first. It will be easier for you to take a look because this is previous, right? So I start from 2019. 2019. Okay, that's better. You can see their metrics here, the margin has been improving, including the operating margin and the net profit margin also. Grew to 10% already. Yeah. Okay, so this company here shows promises. Okay, has been improving the metrics so far. Okay. Then the balance sheet. Balance sheet is very healthy. Very, very healthy and improving on recent years. So the total asset, you can see how they run the company. Okay, asset keep getting bigger and bigger. Then the cash, also growing every single year. And quite recently, you can see for a company, I love to see this because it kind of assures me, because we can see that the cash can cover their total liabilities. So if they, in short, okay, if anything, the debtors they want to take, I ask them to pay them back, no issue. They can just use the whole cash, pay off everything, and they can still run the business very, very good. Yeah, and it's good to see. You can see their cash ratio, right, has been growing. So they have been keeping more and more cash. So 2.1 times current ratio, 1.1 times cash ratio is a very safe number. Okay, so balance sheet, Meituan is quite good, not bad. Okay, the most important I want to see is the cash flow. And whenever I check, right, I'm very happy. Okay, so Meituan here, previously was cash burning. Perhaps they are investing in the business, investment phase, right? I believe so. Yeah. So it's good. Okay, starting from 2023, 2024, and recently this year, very good. Their cash from operation has been increasing. Yeah, as if free cash flow also increased and quite a lot. You can see the cash from operation here, they do not need a lot of capex, and that's why they can keep a lot of free cash flow here. So let me go to the capex. How much capex they need? Wait, let me find the capex. Do I have it here? Capex. You hold on. Don't have I don't have, then never mind. Okay, yeah. So the thing is, you can roughly gauge You can see 61. Okay, 61 million here. Right, they only need to spend around 11 million like that, or 10 million, and they can still keep 50 million. Okay, so very, very good. Okay, for this company here, they can generate a lot of cash. So far, Meituan is very, very good. And the next thing I want to take a look at is the share value. Whether do they, continue to give shareholder value? So very good. The revenue per share has been increasing a lot. You can see from last time 10 years ago, okay, it's around 3.8. Now it's at 55. So they are growing very fast here. Okay, the shareholder value. But good news. Okay, the market, okay, I think they never see their potential. The price to sales is very low, 2 times. But of course, don't compare to JD lah. JD was pretty sad. Okay, but 2 times price to sales. Okay, based on my experience, right, outside there, okay, 2 times is really very very cheap. It's roughly the same as Baba right now. Yeah, it's 2 times price to sales lah. So that's why the price, okay, because you see, based on the financials, okay, everything is improving. Okay, this one also improved, quite healthy. All right. This one also improved the balance sheet, cash also increasing already, all right. But the price still quite stagnant in a sense. Yeah. So for Meituan, okay, if you are a shareholder, you can rest assured you are investing in quite a good company so far. Okay. So the next step, whenever I saw this kind of company, hey, numbers quite okay, seems got potential. Okay, then I will go and dig further. I want to find out any future plans, can they continue to get bigger or not. Yeah, that's when it will make the share price continue to go up. Yeah, so I guess, well, market being market lah, okay, has been flat for quite some time, but I also do not know why the market cannot see the potential in Meituan. But so far, the number is quite good. Yeah, so for those of you who recommended me to take a look, okay, you can continue to follow this stock lah. For Meituan, it's very good. Okay, all right. So the next one, okay, is Xiaomi. Okay, wow. I know this brand, but I never even bothered to go and take a look about this company lah. But the numbers, okay, are very very good for Xiaomi. Okay, now, but of course, okay, a little bit, okay, of self-advertisement here. Now, before I go to Xiaomi, okay, in case you're watching this video, I'm very sure you are also stock investors, right? So if you are searching for guidance, okay, or searching for any stock ideas or stuff, or you want to join a community, you can take a look at my Telegram community here. Okay, if you want to join, okay, you can click the link down below. Just click it and you can join already. So some of the things that I did in I'm leading this Telegram, okay, together with my another co-trainer, Derek Lau. So sometimes, like for example, if you all still remember the tariff issue, right? At that time, March, April, okay, the market was dropping, right? So what I did was I keep on sharing my views, okay, and I guide all the people here. They can see there's 2,258 people here, right? So I share, what I did, what is the view, okay, how you should invest, how you should look at it, what you should think, the mindset that you should adopt and stuff lah, everything. So sometimes, okay, at the time, market was keep on dropping, everyone was quite fearful. So I do share a lot. Get a lot of my views and ideas. Sometimes there's daily quotes and stuff, okay, to improve your learnings and stuff lah, anything. Then sometimes, okay, when we have the time, we will also create a stock session, a free Zoom session for you guys to attend. Like for example, on 21 July, I posted this session here. On the 23rd July, this Wednesday, yeah, I'll be sharing. The team and I will be sharing another new stock opportunity for them. So they can just click the link and then they can register lah. So this is some of the perks, okay, for you guys to join the Telegram. Okay, so if you're watching this video, you are interested, okay, just click the link down below and you can join my Telegram already. Okay, so let's move on, okay, to Xiaomi. All right. Now, when I take a look at Xiaomi, I'm quite impressive, okay, with the numbers. Yeah. So previously, okay, they are already profitable. Okay, but I guess during this period, 2021, 2022, and this one, I never really take a look at. But I guess why the business a little bit dropped, maybe it's because of I don't know, maybe the post-COVID stuff, or even the inflation thing or stuff lah. So that's why the drop. But the most important thing to take note is the recent recovery. Okay, they recovered, okay, from this previous years here. So they grow at 35%. And most recently at 40%. So if you look at the quarterly numbers, they have been improving every single quarter. Yeah, so it's quite impressive lah. They are able to grow 10%, 27, 32, 30, 48, 47. This is what I call accelerating growth. Okay, now for a company, if they can produce accelerating growth, normally, okay, the stock price will go up, man. Yeah. Okay, so I guess that when you all check the chart, that's why they go up lah. I think this is one of the reasons why. Yeah. So for Xiaomi, the business, okay, currently, okay, they should be doing very very well. Yeah, because they are growing up already. Now, margins also impressive. Like I said just now in the first, when I talk about JD, right, market will re-rate a company if they see metrics all improving. Like the previous years, you can see the margins are very very thin. Okay, but as the years goes by, you can see their margins keep on improving, almost double, from 10% to 21%. That means the company is doing something right, okay, to further improve their margins already. Yeah, you can see this one also. The operating margin also go up. Yeah, so that's why they can see the net income, operating income, okay, is getting higher and higher and growing also. Yeah, so balance sheet, okay, quite impressive also. Total assets very very high. Okay, the cash is this level continue to grow. Of course, when I take a look at this, right, their total liabilities are quite high. But this one, don't worry, it's because of the nature of their business. Okay, why? Because you see, Xiaomi is a provider of hardware and software, right? But majority quite is hardware. So you can see the contribution from this total liabilities, this one. Let me help you guys take a look. Total liability. This one, accounts payable. The total liabilities is what, 210,000 here, right? And this one is 93,000. So you can say it's around roughly half of it. Okay. And this one is what, accounts payable. That means the money you owe to the suppliers. So this is the money that owe to the suppliers. So of course, provided if Xiaomi can continue to pay to the suppliers, then roughly no issue lah. That's why they are included in the accounting under the balance sheet here. Yeah. So that's why they are part under here. So if they can continue to pay, right, then no issue. It's the nature of their business. They have to do this kind of arrangement. Yeah. So the cash is okay. Yeah, I can see the cash they can see. So if they can continue to produce cash, use little bit capex, and they can keep this much, 53. You can see 53 million. Okay, they can keep 43 million. Hey, only need to spend 10 million also. So if they can continue to produce cash, okay, you can see quite recently, recent years, then they can continue to produce cash. So let's go to last 12 months, okay, to see how much they can produce. See, okay, they can continue to produce cash quite recently. Yeah, so no issue lah for this liability is quite safe lah. Yeah. Okay, so this is the cash. Cash is quite okay. All right, they can produce a lot of free cash flow here because of the low capex. Yeah. So I guess that's why the market decided to re-rate Xiaomi lah. Yeah. So this is how you can see how a certain share price go up. Yeah, because we like to find companies that quite good, but hey, all the metrics improving, but why the net price never go up? Right. So it's sometimes have to wait lah. Sometimes, okay, for this time, okay, for this example, it's Xiaomi's turn. So Xiaomi at that time, drop everything. Okay, so it's I think it happened this year. Can you see here? 2021, 2022, 23 here, right? Around this year, it was dropping. That's when the metrics start to improve around this year, 2023 onwards and everything. So that's why, okay, I see from 2022, 2023, the market start to re-rate their price to sales ratio already, all start to go up. They start to see improvements already here. Yeah, so that's when the market recover lah, and that's why you make the money. Yeah, so I guess this year lah, that's why you all got interested, right? Because the price continued to go up. Yeah, so if you invested early, congrats to you. Okay, congrats to you for making money from here. So you can see, I think the next comparison you can see Xiaomi here, all the numbers all very good, improving. That's why the share price go up. Then you may ask, hey, Meituan, which one is Meituan again? Is this Meituan? No, Meituan is this one. Meituan. Yeah. So I think this one also can be another potential stock movement. Okay, I cannot say I promise. Okay, I'm seeing what I'm seeing here. All right, sharing you what I'm seeing now. So like everything is improving. You see, this one also improve. Margins also improve. Balance sheet also stronger, can cover total liabilities, providing cash some more. But hey, the price to sales ratio still compressed, and the stock haven't moved yet. Will it move like Xiaomi? I cannot do a promise. Okay, but the pattern is there. Okay, so it's worth to take a look at both Meituan and Xiaomi for now. Yeah, so I do hope this information can further help you guys. Okay, so if I want, okay, let's say for example, all of these three companies, right? I want to take a look. Of course, it's Meituan, okay, Meituan and Xiaomi, okay, Meituan and Xiaomi. So I will go and dig deeper because, like for example, Xiaomi went up quite high already, right? Yeah, so it's a little bit sian a bit missed the boat already lah. But it seems that I think Meituan could be a potential. Yeah, I need to dig further, okay, to see whether can they continue to grow in the future. If I can see that Meituan can continue to grow, then the price is stagnant, right? I'm not worried because my company, the stock, it will be supported by the fundamentals of the business. As long as the business continue to grow, the price is stagnant. I'm not worried. The price will re-rate or go up in the future. It's just that I do not know when. So that's the thing about stock market. Okay, we invest in a good company, keep on growing, the price just stays stagnant. Don't ask why. It's just like that. Stock investing is like that one. Yeah. So we just need to be patient. Okay, and then the day will come. The day will come. The market will realize, that the company's potential. Then suddenly every investor suddenly got interested in the stock, and then it will go up. This is what happened with Xiaomi lah that time. Yeah, so Xiaomi, you can see why this stock here all dropped like that. Then suddenly flat, then suddenly jump up. So this stock investing for you lah. Okay, so for this video here, okay, for these three companies, okay, I would definitely prefer Xiaomi, okay, because the business is going very well, margins improving and everything. Xiaomi is quite a good company, I would say, but it's just that in terms of if you compare to China peers, right, the price to sales ratio is on the reasonable side, higher side also lah. Yeah, the ones that maybe you all want to take a look at, okay, the potential one maybe I would say Meituan. Yeah, because metrics all improving really. Okay, but the price to sales is very, very compressed. Okay, but I need to continue to take a look first. Okay, dig further on the business because now what I'm doing with you guys is the numerical side, the financial side. But I need to check the business side. I want to make sure they can continue to grow. Otherwise, okay, if you buy this, although cheap, but if you can see that suddenly this business cannot grow, stay stagnant, right? Then no use to invest in the company. Okay, and let me see the quarterly before I end this video. So for example, Meituan, right? Okay, I have to take a look first. Okay, is this the normal trend? You can see from this one, drop, go up. But get higher, drop. Then next quarter, do we go up or not? So I guess this is the trend. From September, December, and March, it will decline a little bit. But next year, they will continue to go higher. I guess this is the nature of their business. Okay, so first thing about Meituan is I will need to go and take a look and see any future growth. That is very, very important for me. Okay, otherwise, if the company cannot grow moving forward, okay, then the price stays stagnant because the numbers tell us about the past. It just tells us, okay, this company is profitable, well run, and stuff. But when I invest in a certain stock on that point of time, I want to invest in the future. So I want to make sure that the future they can continue to perform like they did last time. Okay, so this is what I can share with you guys, okay, for this video lah. Okay, so I hope you guys enjoy this video. So like I said, okay, if you all want to find a Telegram community, all right, you can click the link down below and join because so far inside there we do follow Hata, Alibaba, Palantir, CrowdStrike. Yeah, if you want to find guidance and lessons and stuff, okay, everything is inside there. All right, so that's all from this video. Okay, thanks for watching and see you in my next video lah.